Hello everyone, this is Knowledge Topper, and in this video we are talking about financing activities of cash flow statement. We already did 3 videos. In our first video we briefly learned about cash flow statement, that why do we need cash flow statement, what is the purpose of cash flow statement, how cash flow statement helps in assesses entities or companies cash position or liquidity position, you can say that. Then we did operating activities in our second video and investing activities in our third video, and now it is the fourth video and we are talking about financing activities. So let's get into this. So what is financing activities? What financing activities tells us, and what we are including in our cash flow statement financing activities. So it is all about changes in long-term liabilities, and you can say stockholders equity items. So you will find all of these items related to that in this financing activities. So here it is, that what we include in our financing activities section when it comes to cash inflows and cash outflows. So as I told you, that we mainly focus on stockholders equities and long-term liabilities. So like when it comes to cash inflows, like here's an example for you, that you mostly see these 4 items in your financing activities section. Like if you sold any common stock, like any shares, so you should have to record in our financing activity section, and it is a cash inflow because you sold a common stock, means you sold a share, you gave share to, like if any entity sold a share to its shareholders or public, so they sold their shares to public, and what they get is they get cash. So there's a cash inflow. The second is from issuance of debt, bonds and notes. So the second part is from issuance of debts. Yeah, it means that bonds or notes, if a company issue its bonds and notes, so people purchase that, and they have to pay cash to them, to company, and it is a cash inflow. So when we talk about cash outflow, like to stockholders as dividends, so when they purchase, like people purchase stocks of a particular entity or particular company, so the company needs to pay dividend to them. So as the company pays dividend to its shareholders or stockholders, so it means that it is a cash outflow, means the company gives gives cash in shape of dividends to its stockholders. So the cash may decrease and it is a cash outflow. So the second is to redeem long-term debt or require capital stock, like treasury stock, means that they want means that entity wants to buy back a particular debt, you can say a bond or a particular share. So they pay the cash and then they get that particular bond or particular stock, so they have to pay cash in return. So it is a cash outflow. So this is what all about financing activities, and you may find these kind of items in your financing activities. Now let's move it in our example that we did. So here's an example that we take in our previous videos and we continue them. We already did our operating activities and investing activities part. Now we are looking forward to our financing activities part of cash flow, that how we record such items and how we show in our cash flow statements. So we get the balance of negative balance of 1,41,000 from net cash used by investing activities, and we got net cash provided by operating activities as well, 1,72,000. If you didn't understand that how this amount came, so you should have to watch our previous 2 videos. Okay, so now we started from cash flows from financing activities, just under net cash used by investing activities, right here, like cash flows from financing activities. So now how we record that, like issuance of common stock means that a company sold, or you can say issue common stock to its public, to its shareholders, and as their shareholders buy that particular common stock, means that they give they give cash to that particular company. So it is when the public gives money to its to the entity, to the company, so it means that 20,000 should be gained in the cash flow statement of company's financing activities section. So issuance of common stock, we add the amount 20,000. Payment of cash dividend, like payment means that the company should pay dividends to its stockholders. So as the company pays dividend, it means 29,000, like we should deduct that amount because company pays that. So now at the end, what we did is net cash used by financing activities. I already told you that if you have gain, means if you have a positive balance, like if there is instead of negative 9,000, there should be 9,000 positive, you should write net cash provided by financing activities, because I already told you that if you have a positive balance, you should write net cash provided by financing activities, and if you have a negative balance like 9,000, you should write net cash used by financing activities. So for positive we used provided, and for negative we used used. Okay, so in this case we have a net cash used by financing activities 9,000, and at the end what we did is write net increase in cash and how it came. So let's focus on the whole partial statement. Like net cash provided by operating activities, we got 1,72,000, and net cash used by investing activities, we got negative 141,000. So if we calculate this, so 172 minus 141, we comes up with 31,000, and then subtract net cash used by financing activities, that is 9,000 negative. So 31 minus 9,000 negative, we comes up with 22,000. So that is how we get 22,000 in net increase in cash. If there is a decrease, we write net decrease in cash, and then we have a given cash at beginning of period, and at the end we got cash at end of period after adding to that. So this is what we have, and I would also tell you about non-cash activities, like you see here, like we should disclose in separate form. Like issuance of bonds to purchase lands means it is a non-cash activity, like someone issue bonds and purchase land, for example company A issue bonds and to purchase land to company B. So there is no involvement of cash. You see that they issue bonds and company B gives them the land, so there is no involvement of cash. So we recorded the non-cash items in separate sections as mentioned here. So now I will show you the complete cash flow statement, that what we did in our previous 3 videos combinedly. So that is how a cash flow statement look like. Okay, so that's what we did in our cash flow statement sections, and this is the format that we should apply and should follow. So here it is a proper format that you should follow, like write a company name, write a statement of cash flows, and the date of the period that you have given in your income statement, balance sheet, and in your question you should write that as period ended and for the period ended so and so, and then you should follow that what I told you about. So this is the way to do it. Hope you understand this, and hope you like this video, and hope it will work for you. Thank you so much everyone. If you like our page, subscribe. If you like our video, subscribe Knowledge Topper, our channel, and also like our Facebook page, so you get more good stuff like that related to accounting and other subjects. So it's time to say goodbye to you. Thank you so much everyone. Meet you in next video. Until then, it's time to say bye bye.